Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Do you have money sitting in the stock market and you're worried about it? Or worse, you have money sitting at the bank, not keeping up with inflation? My name is Charles Carillo, founder and managing partner of Harborside Partners. And since 2006, I've been investing my money and my family's money into income-producing properties. These are real assets, real properties with real addresses that produce real cash flow. At Harborside Partners, we provide passive investors who love real estate with a turnkey investing solution. If you want to put your money to work in real estate but can't find deals, don't have the time to get funding, and the last thing that productive people want to do is manage real estate. We find the deals, we fund the deals, and we manage the tenants, the termites, and the properties. Partner with us at investwithharborside.com. That's investwithharborside.com. Go to investwithharborside.com. If you love real estate, you like the idea of passive income, and believe that income-producing properties will appreciate over time, go to investwithharborside.com. That's investwithharborside.com. Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Adam Gower. He combines over 40 years of experience in real estate investment and finance with digital marketing strategies to build crowdfunding platforms for real estate capital raisers. He has raised over $1.5 billion, or he has completed over $1.5 billion in real estate transactions, and has personally raised over $500 million in capital, and has taught over 4,500 individuals how to build wealth, preserve capital, and earn passive income from investing in real estate. So thank you so much for coming on today, Adam.
I'm very happy to be here. Thanks for having me, Charles.
So give us a little bit about your background, both personally and professionally, prior to getting involved in real estate investing back in the early 80s.
Well, prior to getting involved in real estate and real estate investing, I was at high school. Actually, that's like basically I left high school and started working for an electrician, pulling wires. So I was crawling around in basements and attics. And pretty quickly, that very hands-on experience evolved into working for a ground-up multifamily sponsor. And my job there was to raise money for them. I was hired by them to, to basically stand in front of investors and pitch the deals that they had. So that's my background is almost, but not quite, but almost exclusively commercial real estate investment and finance.
Very interesting. Is there a specific reason why you chose it compared to other industries that you might have learned about at that time, real estate over something else or commercial real estate?
That's an interesting question. No, my life has been a meandering path of discovery. Basically, look, I was 18. I was knocking on doors and telling people I'll do anything for $5 an hour. And I started talking, my family was involved in real estate in a big way in England. Okay. But when I came to the States, I was on my own. And one of my friends was a real estate developer, ground up real estate developer. And I was actually working for a boutique Japanese M&A shop, actually, little M&A shop. And I met with my friend. I used to like to have breakfast with people a lot in San Diego. And so I met with him. He was telling me about the kind of returns and what they did. And I just, oh my goodness, that's really interesting. He showed me a pro forma. I can almost remember it in my mind's eye at the moment. Showed me a pro forma. And I introduced it to the shop I was working at. And it very quickly I want to say spiral is usually something that goes down, but they very quickly evolved into raising capital from these Japanese investors. They really liked the idea of this. Was also during a period when there was a lot of Japanese investment.
Yeah, they were buying up everything. Yeah,
at the time it seemed that way. So that's kind of how it evolved, and I never really left the industry since. One way or another, I've been involved.
Very interesting. So coming full circle here, explain kind of what your company does now and you have an interesting business model of how you incorporate online marketing into real estate investing.
Okay, so so what happened was, and during I'll try, that bit of context is important for how I got here. So in the end of the global financial crisis, actually in 2007, I sold my entire portfolio of real estate. I got lucky and I exited. And and that same year, I was brought into a major bank that had done a lot of commercial real estate lending. And most of the loans were defaulted, so I had to help them clean the balance sheet. And then I ended up going over to Colony, who'd done deals with the FDIC. And eventually the global financial crisis kind of mellowed out and the economy started to pick up again. And when that happened, all this distress stuff that I'd been working on and done actually so well in went away. And I started doing seed and angel investing in startups. So I was suddenly surrounded by all these kids, really kids, like 18 to 20 years old, to 18, 21 years old, who were starting tech companies and looking for seed investors. And they were talking a different language, and the language they were talking, a language that I didn't know. It was the language of digital marketing. And I mean things like Google Analytics or SEO, or I mean, really nothing. I knew nothing at all about this industry, but it was fascinating to hear them talk about that. And then in 2012, the Jobs Act passed, and suddenly you have this opportunity. I looked at it, I thought, my goodness, all this marketing that you can do online now has never been permitted before for sponsors, for guys like me who've raised, hundreds of millions in our life. We've always done it face to face, in person. Now we can do it online. So I started to investigate, or I started to experiment and build systems for myself to see how they worked. And they started working extremely well. People would contact me who I had no prior relationship with, and they knew all about me. It was crazy, right? They were already inclined to working with me. And so that's now probably, I don't know, I was talking to my wife about this the other day, it's probably solid 8 years ago, maybe more even. And so over that time, what Gower Crowd has evolved into being really one of the only, if not the only, but certainly the foremost platform for assisting sponsors to raise capital online. And what we do essentially is we build best of class crowdfunding platforms that are tailored to the sponsor, specifically to a sponsor. These are not cookie cutter, they're not cookie cutter websites. You can't expect to be successful raising capital for real estate if you just put out a cookie cutter website. So we build, I think the English term is bespoke websites that have functionality, lead generation, hooked up to social media lead generation, tracking capabilities, automated email systems, everything built into one platform so that you can raise more capital more quickly from more investors without actually having to spend time pitching your investors. That was a long answer to your question. I forgot what your question was, but I hope it answered it.
No, it's perfect. It tells us about your foray into getting into mending both of them together, the real estate investing, the digital marketing, which obviously prior to 2012 with the Jobs Act wasn't really a thing. It was really back in doing, let's say, country club deals, right? Like you said, face to face.
Right.
So going forward now, I mean, there's a number of different crowdfunding sites out there now. And obviously you're talking about building websites that are sponsor specific and they are unique to that one sponsor. But I think when people look and they hear crowdfunding, they're talking about a platform where there's a lot of deals on there, where there's a lot of sponsors on there. And I have people reach out to me and they're asking about those. They want to get involved in real estate investing, passive, and they look on these and they don't really know exactly what level of information they're getting. And I mean, when you look at these other websites that are out there that are putting deals out there, is it the job really just to put out these deals and have them already like a fully vetted deal, a fully vetted sponsor, or are they really just supposed to be just listing deals, and every investor, caveat emptor, goes in there and buyer beware, finds out what they're supposed to do and does it? Because you have a lot of new investors on these.
Right. So it's a good question. I'm just tapping out some notes here. Okay. So that's actually quite a big question. Let's start at the very top. For a passive investor to get to know, so in other words, not a professional real estate investor, somebody like somebody who is an accredited investor who has a real day job, and they're looking to diversify their investment portfolio into real estate. The picture you've painted is essentially twofold. One, there are crowdfunding platforms that act as marketplaces. And then the second is to invest directly, or to find and invest directly with individual sponsors. So let's start with the platforms themselves. Some of them are exceptionally successful. The really big ones are, of course, CrowdStreet, who have, the latest number, they've raised about $4 billion in equity since they started. So they're really huge. But CrowdStreet, Realty Mogul, Equity Multiple, Real Crowd, they're the kind of the early adopters in the industry, and they're the ones that have really survived and thrived over the last 10 years, or however long they've been. Actually, it's not 10 years, about 8 years that they've been active. And what they do is they provide marketplaces. You will find that in the small print, they will never tell you that they recommend an investment, and you've got to do your own homework. And that's really a bottom line. You really do have to do your own homework if you're a passive investor. You got to get comfortable with a shop, with a sponsor, and you got to and ask your own advisors. So you've really got to do that. What the platforms do, though, is that they do I've got to be careful what I say, actually, but they promote that they screen the people that list on their website. So, for example, CrowdStreet will only accept 5% of all sponsors, right? Now, whether or not as an investor you think that their screening process is effective and it meets your standards, that's a whole different discussion. But they only take 5% of sponsors that come to them. However, only 5% of sponsors go to them. So what you're looking at on the CrowdStreet platform is 5% of 5%, which is a tiny number, of all the opportunities that are out there. Now, the other issue that you have with the platforms is that they come with a cost of listing. Somebody pays for that. It's typically not the investor, although in some cases it can be. You've got to look into the small print. But there is a cost to listing on the platforms, and it can, on these marketplace websites, and it can be relatively high. So what you'll find is that a lot of sponsors will pass on listing on the marketplaces because they don't want to pay the fees, number one, or they will list on the platform if they can, and then they will promote their own deals off platform separately. Or what we see, and a lot of our clients do this, is that they will discover crowdfunding because they went to one of the platforms, listed, had success, and then decided, why do we need to pay these fees?
Yeah.
Let's do it ourselves. Okay, so so for an investor, you find these are marketplaces, or you can go directly to sponsors. But what you have to look for in both cases is you got to establish a relationship. You don't have to actually talk to anybody, but you have to establish a relationship with the sponsor directly, meaning you want to check out their website. You want to look at what kind of educational materials they have, what kind of videos they have. Are they open? Are they communicating extensively? Do they send newsletters, right? To what extent do they communicate what they're doing to their investors, so investors can really understand or form their own view of who they are? And that applies equally to sponsors that don't list on platforms as it does to those who do.
Oh, that's a great answer. You've been around real estate and commercial real estate for many decades, and you've looked at a lot of deals. Let's just say high level. I mean, what are the metrics that you're looking at that you would suggest people to pay the most attention to when you're reviewing a deal initially, let's say?
So there are a few things. What I like to do is when you look at, the first thing you got to do is look at the offering documents. Right. So at least it's a kind of a starting point for credibility. You've got all the deal memos, and those are designed specifically to entice you to invest. But the small print is in the offering documents, the PPM, whatever subscription documents, whatever, the 80 to 100 page documents that probably nobody ever reads thoroughly. That's the first place that I go. And the things that I look for, and you can actually do this really fast. You don't have to. You don't have to read 100 pages. Run searches on those documents for some keywords. One of the keywords is fees. So I want to see what kind of fees are being paid. That's the first thing, not necessarily in order priority. The second thing is I want to see what the co-invest is. How much is the sponsor putting into the deal? And how much do the fees that they charge offset that investment? Because what you're looking for is an alignment of interest. You want to be sure that a sponsor has skin in the game and that it's real skin, right? It's not carried interest that's been carried over from another deal, or that they're putting in $1 million of their own money, but their acquisition fees are $2 million, right? It's basically, there's nothing there. The other things to look at that are very important are experience and track record. And when I say that, particularly I'm talking about multi-cycle track record. How long have they been doing this, and what kind of cycles have they gone through? So, for example, forgive me for saying this, I don't know too much about you and what you've been doing, so just sorry but forgive me anyway. But you asked me a question, I'll tell you. Anybody that tells you that today, and I'm going to date stamp your podcast, 23rd, whatever we are, beginning of April 2023, who tells you that they've been in real estate for 10 years hasn't got experience. Basically, that's like going to Vegas and just being told, oh, yeah, you're going to win on red every time. Just keep on going. And then one day it doesn't work that way and you can lose everything. So having experience of having gone through cycles, understanding the impact of cycles, being conservative with debt, because debt is really the killer. Real estate doesn't kill deals. Debt does, right? It's not the real estate. It's the capital stack and the amounts of leverage. So I always I am also, Charles, I'm a super conservative investor to the point of, almost the point of paralysis, to be honest with you. And that's because I have a very strong aversion to losing money. And so I look for downside protection first and foremost. Is my money going to be safe with this sponsor? And then I look at returns. And I also look long-term. I like long-term. I don't want to be flipping and I like seeing sponsors that have a long-term perspective, because ultimately that's how you ride out downturns, is by underwriting to assumptions that you want to hold an asset for a long time. If you don't do that during a downturn, like we are headed into more deeply in the latter part of this year, you'll lose deals. All equity will be wiped out. So I'd rather take low returns with higher security in terms of confidence I'm going to get my money back. I'm sure there's a lot more that I could say about sponsors, but that covers kind of the main things. Yeah.
So it's really, I guess you would prepare for that by having lower leverage on deals that you're getting involved with. I mean, that's really just makes it safer, correct?
Well, an effective look, a sponsor who is truly conservative at underwriting to downturns, or underwriting to hold for the long term, irrespective of what the market does, is going to be looking at alternatives if the market does falter. So they will underwrite. They will look at, well, so for example, you might look at how deep did the market that we're in fall during the global financial crisis, assume that's what will happen in terms of values and rents and occupancies during the next cycle, and then underwrite debt and all of your numbers to survive a similar downturn. Now, what that does is it substantially reduces the potential for upside, but it also secures the downside. And that's what I look for. I would rather have lower returns and be confident, sleep at night that my nest egg is going to be safe, for decades, than try and make a quick buck.
Yeah. And that mentality is kind of opposite of what a lot of people in the market are now, or what they were for the last couple of years, few years.
Yes, exactly.
So you mentioned one thing about communication prior to someone investing into a deal. What have you found with some of your successful clients, the proper amount of communication after a deal has closed? Because I always find this with our deals is that, you have some investors will never respond to you. Doesn't matter what I send them, they'll never respond. And then you have other ones that want more information, and they're a little bit more, let's say, hands-on as a passive investor.
So we did a survey, actually a multi-sponsor investor sentiment survey at the end of last year. So just 3 months ago, it's still valid. And we asked this question: how often do you want to hear from sponsors? And the number one answer was at least once a month. We want to hear from you at least once a month. And so what you want to be doing, this is what we do for our clients, and this is what we teach the people that come into our network, that hire us to show us how to build and etc., how to build their systems and to raise more money rather than doing it for them, is we recommend that you have a newsletter that goes out at least once a month, and that newsletter covers down the fairway information, just relevant information. You don't want to be, there's a lot of people that send out what I think of as bubblegum, just content that is mass produced. I mean, now we've got AI writing, right? ChatGPT and AI writing articles. But frankly, a lot of the content that goes out there is written by humans. It may as well have been written by AI, right? It's flat. It's not really authentic to the sponsor. What you want to be doing is to be addressing your investors' primary concerns. Their primary concern at the moment is protecting their capital, not just me. That is what's happening with investors. At the moment, they want to feel comfortable that you are protecting their investment. Therefore, for example, a newsletter that you put out should explain what your defensive strategies are to protect investor capital. And the best way to do that is to write an article about how you've been orienting your investment strategy to capital preservation, and what you're doing now as interest rates are going up, how you're defending against that kind of situation, and be open and discuss all the different angles that you're approaching and the challenges that you're having and how you're overcoming them. Put it in an article, put it on your website, and punch that out in an email that says, here, we've heard your concerns or whatever, right? We've heard your concerns about, and this is how we're dealing with, this is how we protect your capital, click here. And then redirect people back to your website. That's really what you should be doing, and you should be doing it monthly.
Yeah, that's great sentiment, because on passive investments that I have, when I'm looking at emails that are coming from sponsors, I'm, picking out collection percentages, not really on how much rent we increased per month. You know what I mean? You're looking at really maintaining what's already there and, keeping that property as full as possible with paying tenants. That's kind of how I found it. And I found a lot of our investors think the same way.
Yeah, exactly. Yeah, it's really important. You've just got to communicate stuff that is relevant to your investors and that speaks directly to how it impacts them.
So Adam, over the last 4 decades, from knocking on people's doors for $5 to where you are now, how has your relationship towards money changed over the years?
Well, I have more of it now than I had 40 years ago. I didn't have anything 40 years ago, really nothing. But I'm still conservative. If I was to look back, I would say I wish I'd taken some bigger risks, just because, I've been so conservative. There are deals that I look back at and just think, gosh, I wish I'd not been quite as conservative or cautious of, worried about losing money, which I did, or getting into financial difficulties. So I think taking bigger risks would have been something but that doesn't mean not taking calculated not taking calculated risks. They were all calculated, and looking back, I would tell my younger self, buy that, do that. It's a good idea. You never know what's going to happen, but you're going to come out okay. I think an awareness of that you got to take risks to make it big, I think. Yeah.
No, that's great. That's a great response. As we're wrapping up here, what do you think are the main factors that have contributed to your success over the years?
My wife says that my superpower is my ability to hear no and yet persevere. So just as many, like you talked about your investors, some want to talk, some never communicate. You try your hardest and your best. And 99% of people, more actually, will say no the first time you approach them. That's a lot of people. 1 in 100. You got to hear no 99 times before one says yes. But that one will change your life. And so I just let it wash over me most of the time. I just let it. Sometimes we manage our clients' newsletters and their email process, and we do our own. Occasionally, either we or they will get an FU email. It happens, and I actually always feel encouraged when we get one of those. And I'll tell you why. Because when you think of mass solicitation, when you're soliciting for investors online, talking to millions of people, it's statistics. And if you remember the normal curve, I think it's called the bell curve here. Somebody that sends you an FU email, take me off your list, I don't like anything you're saying. There are 2 or 3 standard deviations to the left. They're in this group of people that really don't like you. But statistically speaking, it doesn't prove anything, but it indicates that on the other side of the curve, there's somebody else who is dying to invest with you. They're reading everything. They're watching all your videos. They love what you do, and they're just ready and waiting for you to say, invest now. So that's, again, I keep forgetting your questions, but
no, it's great.
Got your question.
No, it's fantastic. It was a great response. So Adam, how can our listeners learn more about you and your business?
Thank you for asking. So the best thing to do is to go to gowercrowd.com. So that's GOWER crowd.com, gowercrowd.com, and sign up for our newsletter. It's a weekly newsletter. It's free. It covers everything that's happening, all the deals that are listed in real estate syndication and crowdfunding industry. We cover industry news and updates and everything. I mean, it's free. You can always unsubscribe. And if you want to talk to me, the first time you get one of those, just hit reply, and you'll find me at the other end of the email.
Yeah, you can always unsubscribe. There's no need to reply with FU in there to Adam. So.
No.
So
I'll
thank
unsubscribe you for you if you do that. I'll just hit the unsubscribe button.
Thank you so much, Adam, for coming on today, and looking forward to connecting with you here in the near future.
Charles, it's so nice of you to ask me. Thanks so much for having me on the show today.
Bye-bye.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.